Hey traders, welcome back to the channel. My name is Ruben and I'm a full-time trader with the prop firm The Funded Trader. The Funded Trader is a prop firm that enables you to trade a higher size account upon passing one of their challenges. So, whether you're a scalp, swing, or intraday trader, The Funded Trader has several packages that will surely fit your trading style. If you guys are interested in learning more about the company or taking one of their challenges, I'm going to drop a link down below. Be sure to check it out. But let's get right into today's video. Today's video is going to be a trade breakdown of a short that I took on that same funded account during the London session on the pair EU. Now this was on the 15th of June, so let's get right into it. As you guys can see, we were on a downtrend. We were making lower lows and lower highs until we eventually broke up to the upside. We had our first pullback which respected the extreme demand and then broke up to the upside. Now, this is where my trading session started, at this moment in time. But a bit of background on the trade idea. Anytime that we break a higher low, we can expect a pullback in order to continue moving in the same direction. In a perfect world, this is how it would look. We make a higher high, a higher low, a higher high, and so on until the market eventually reverses. Now, as we know, trading is imperfect, so we can only work under a certain set of assumptions. Anytime we break a high, we can look for key levels of supply, in this case, in order to expect a pullback for us to continue moving to the upside. Now, we don't know when that's going to happen or how long that's going to go for, but at least we can look for these levels in order to get a trade idea going, which was the basis for this trade idea. So as you guys can see, we had a 50-minute POI here, and a 1-minute nested within that was unmitigated. So this was our first level of interest. Now, if this didn't work, we're going to be looking at a level up here. But for the meantime, we're going to be focused on this one right here. Now, we drop down to the 1 minute and we can see that we tapped into that 15-minute and straight away mitigated that 1-minute supply. Now at this moment in time, we have no guarantees that this level is not simply going to have a retrace and then break up as we talked about order flow. So we need to wait for some sort of floor or anything that would indicate that we've now broken to the downside and we might expect this trade to continue moving down for the short term, as we know this is just a pullback on the 15-minute. This is kind of the model that we're looking for. We're looking for a first mitigation, ideally a sweep, and then we look to play the extreme or the flip, but in this case we had no flip. So once price came and swept this high, we now had an entry model. We had first mitigation, a sweep of the mitigation, a break to the downside, all within a 15-minute POI, and we've now formed a 1-minute chain. We have enough confluences to enter, which is what I did. So as soon as price broke to the downside, I set my pending order with a 3-pip stop loss. Now, as you guys can see, I have a break-even level down here. Let me explain that. Anytime that I enter a trade, I go break-even at the origin point of the move that tagged me in. What do I mean by that? Well, if price is moving down and my POI is up here still, I will put my break-even on the last swing or the last pivot point before I get tagged in. In this case, this would be down here. Now, what this means is that as soon as price breaks to the downside, past this level, I will move my stops down to 0. This is to protect my risk and to take the risk off the table, and it allows me to take more scale ins if I do choose to. Now, as you guys can see, the moment that we broke break even, we had a retrace and we got really close to my level. Now, fortunately, with the funded trader, the spreads are 1 tick to 0 ticks as I have a partnership with ACAP, which is amazing for me since I'm a US resident and we don't get anything better than 5 ticks, which is half a pip. So under my account, it probably would have been out. Anyway, I managed to stay in the trade. And now being risk off the table, now we just wait to see if we hit TP or not. And let's talk about TP. I go a hard 1 to 10. It doesn't matter if the market gives more or less. I take my 10 and then just move on to the next trade. I found that this works out better for me in the long term, and it also keeps it more mechanical and simple. And you want to keep trading as simple as you can. You don't want to overcomplicate. But after that retracement, we can clearly see that the market just decided to drop. And within, 13 minutes, I believe it is? Yes, within 13 minutes, we were in and out, which this was a textbook trade, and I would take this over and over. But that is it for today, guys. I hope you guys enjoyed this. If you guys did, leave it a like, subscribe, and leave a comment down below if you guys would like to see more content of this. Once again, my name is Ruben. I hope you guys have a fantastic trading week, and I'll see you guys on the next one.